GB Cycles here with a weekend update on July 12. So I'm back from Crete, and in a few days I'll go to Austria, and I'll be back early August. So this is the summer update. Previous video I was looking for some kind of corrective move. I was totally wrong, it didn't happen. All along here I was looking for a top and a lower top than this previous top in February. I was wrong. So while I was looking for a top, the market actually made a low. It made this ABC consolidation. It was a bullish one with a higher B, or ABC, and we are a bit out of phase with my cycle. As we see, this low was early compared with my green cycle, and this one, well, here you see the one cycle offset, so it made a low exactly at the same point as the previous one. And right now, as we see, the offset is a bit bearish for this coming week. The cycle is, well, it's a little bit up and then down, but I don't know if we can trust the cycle. This yellow one is the average of the recent cycles. It's also kind of bearish, so some bearish signals into well, you know, some kind of 4-week cycle low here, but not the end of the world, looks like. So maybe some kind of a pullback, and then even a higher high maybe. So this was a 10 weeks oscillation low. I will call this a 10-week oscillation high, and this a low. So now we're looking for a 10-week oscillation high, and this looks too early. Maybe we will see a B, C, and then we can have some kind of a bigger downside. And that's pretty much what I can see in my wavelets. You know, this is my primitive tool for finding a low, placing it here at the wavelet, and you see the low was actually just a couple of days away from the rectangle right end. And you know, this current 10-week oscillation, yeah, this looks too early, but we could break this trend line. And there's another problem here. You know, this was much too you know, no real pullback. We are overbought. We didn't let the air out here. So I could see some kind of a dip down, and then maybe you know, it could be a double top, some kind of a topping formation here. It is possible that this is the high and we could go down, but that's you know, it's possible, but it's not the most likely one, maybe. So I could see, you know, something like this as a bearish scenario and this as a bullish scenario, and I will come back to these. I mentioned there's a problem here, and that's the days, number of days being above the 20-day moving average, and we're currently, I think, 54 days above. And historical, you know, it's too much. We need to get down below the 20-day moving average. You know, there's a couple of, going back 70 years, you know, there's a handful of occurrences where we've stayed substantially longer above the 20-day moving average. But you know, statistically we should dip down below this white line, but I think that dip could be bought and we could make some more topping formation here. Because when looking at my VIX wavelets, you know, I have let me see, yeah, I have this VIX signal. This is an old projection, and it suggests, you know, we are here, the projection is suggesting more upside. I have this other one, forget about this, you know, we are here, this is the projection, it suggests there's more upside coming here. But, you know, this is the duration from the wavelet turning point, and if you see here, this one pretty much was the high. This one, well, it had a little bit more to the upside, and like this one, yeah, pretty much there, some sideways action. So, you know, while these projections suggest that normally we should have several more weeks with upside, it is possible to have a very short one. But it could be a little bit more left. But so it is possible. But most likely some more upside. But I showed you this 17-week cycle back here in the spring, and then I haven't really focused so much on it. But as you see, we are now at the cycle top. All the way here I was looking for a top and a decline, and I had a lot of setups saying it was possible, but the cycle said it should not happen. So normally I want to see both the cycles and the signals, the patterns, the oscillations. I want the technicals to be in sync with the cycles, and if both methods tell the same story, it's something you can believe it. But if the cycles is saying one thing and the technicals another thing, you don't know which one will be correct. So here all the possible setups for a pullback, they were failing, and we have rallied with no pullback below the 20-day moving average, but now we are at the cycle top. So you see this top was a little bit late. This one came a little bit late. Well, this one was early. This was bearish left translated. So I thought that would be a signal that this would be a lower high, but no, it was a higher. We have made an all-time high, but now there's a cycle top. So we have an average here. We could see this green one, suggesting a little bit more upside, or this gray average. We're pretty much there. So the bearish scenario here would be just trending down into September, early October, and that would mean this red bearish scenario. It is possible you can still call this a big double top, and then we crash down. However, this green one is also possible, because, well, if you switch over to my 3.5-year cycle, this dotted line was my scenario going back here, but then we crashed down much too deep, and that created this bullish monster. I was saying back here that I think February will be the bull market high, but it is possible it could be in June, July. But here the bears have failed, bulls have won, and that there are some historical analogs saying that this should produce an A, B, C, and then it can crash down. That was actually kind of my scenario before my summer holiday. We were at this point before me going to Crete. I said, if we continue down here, it could be the bearish one, but if we pop up, it will be the bullish one. So, we popped up, we could make some kind of a pullback, and then, A, B, well, this is a big A, B, C, and we can top out some here time later in the fall. There are some historical analogs supporting that. So, but the cycle is in general bearish into next summer. So, well, this is messy. This is going back 70 years. The vertical lines are showing analogs to where we are today. So this is the 3.5-year cycle. Every vertical line is 3.5 years spaced. And the red one here is the distance to this average, the 3.5-year average. So, we are overbought. We are 30% above the average. And, well, I should make a separate video about this one. But I expect, this average is now for the S&P at 4,800, about that. And I'm expecting sometime we should finally break down and make the 3.5-year cycle low sometime, the next 12 months or so. And I expect this, I expect markets to drop down around this moving average, could even go below. And sometime here I expect, a buying opportunity. So